Alrighty, folks. Welcome back to yet another Coinsider live stream. I'm your host, Kevin. And before we go any further, if I could get a quick mic check, that would be greatly appreciated. Yeah, if I could get a quick mic check before I go any further, that would be much appreciated, folks. And I come at you Monday, Wednesday, Friday, 12 noon Eastern time. Always the same, always consistent. Sometimes I miss an episode here or there, but I'll try not to. I'll try to be as consistent as possible. Okay, I got the mic check. Thank you very much. Let's see. I sound weird. Do I sound weird? Is this better? I don't know why. Let's see. Testing, testing. Do I sound okay, or does the mic sound weird, like hollow to y'all? Let's see. Oh, it should be like this. This should be better, right? I just changed the mic setting. I changed the setting again, so if it sounds good. Anyhow, today we are going to talk about whether or not we're in a recession already, even though the government data says that we're not. And we're going to talk about what these upcoming rate cuts mean for Bitcoin and crypto. Does it mean bullish, bearish, or something in between? I mean, as always, the markets are never as straightforward as you expect. So, yeah, let's see. But before we get there, oh, my goal, as always, 100 likes on the stream. Not asking too much. Would greatly appreciate it if everyone could smash that like button, whether you are watching me live or the VOD afterwards. And speaking of the VOD afterwards, I will leave timestamps for you down below so you could skip around to whatever segment you'd like. Yeah, why are we trusting propaganda from the government? Very true, David Hunter, NYC. Tolu, hello. Ju Bui, hello, hello. Muay Thai, Mark, hello. Hello, everybody. G Lunu, it's great to see y'all. JC, we're in a bull market, so defo bull. Let's get to 100 likes. Yes, folks, let's get to 100 likes. All right. As always, we start with a quick market pulse segment. I promise to keep this one super duper quick today because I want to get on to the main segments. So we had a little pump this morning because one of the inflation data came in better than expected. But there's going to be some nuance here. But I'm going to say not so fast. Okay, not so fast to that. And we've been talking about that in retail DAO as well. Ooh, Hyperliquid's still up quite a bit. I've been buying a little bit more of this. Haven't full ported into this yet because I wanted to manage my risk a little bit. But Ethereum's above 4,400 now. It's oscillating, and Bitcoin 114. So things are up today, but tomorrow has another inflation data point coming, which may shake things up a bit. Ooh, look, altcoin season. Some people have been calling for altcoin season, and it's now at 60 out of 100. So that is quite interesting. Things are going into overbought zone. Interesting. Hype. Not too overbought yet. Okay. Let's see. Market overview. Fear and greed neutral. Sounds about right. ETFs have started to come back into the positive flows, which I like to see. And I believe, let's take a look at some charts actually. BTC dominance. It's BTC dominance is starting to climb a little bit again. Some people predicted, like, I don't want to put words in his mouth, but some people predicted that it's gonna climb BTC dominance in like September ish, and then drop back down in October. But we'll see. We'll see. Because other people are calling for alt season already, like Bob Lucas or however you say his name. We're going to take a look at all that during the KOL call tracking segment of the day. New all-time high for your portfolio every day. Congratulations. I love to hear that, Galaroo. Business cycle, yeah. Some people would say that the crypto cycle is following the business cycle. So they're saying that the top cannot have been in yet because the business cycle top is not in yet. But we will see if that actually plays out. All right. Like I said, I'll keep this market pulse segment very fast today because before we get into the are we in a recession and how will these upcoming rate cuts affect us, before we get to this main segment of the day, I want to talk about something really, really, really important and interesting. This is my big, beautiful news segment, the widespread crypto hack that happened just a couple days ago and what we can learn from it. Okay, I promise this is going to be very efficient and valuable because we're going to take a look at what happened and some takes. So this is the CTO, Chief Technology Officer at Ledger, one of the biggest, if not the biggest, hardware wallets in the crypto space. I believe he was the first one to announce there's a large-scale supply chain attack in progress. The NPM account of a reputable developer has been compromised. The affecting packages has already been downloaded over 1 billion times, meaning the entire JavaScript ecosystem may be at risk. The malicious payload works by silently swapping crypto addresses on the fly to steal funds. If you use a hardware wallet, pay attention to every transaction before signing, and you're safe. If you don't use a hardware wallet, refrain from making any on-chain transactions for now. What chain? Potentially all chains. So this was the first thing. This is a great overview of it all. If this would actually load. How come Oh, wait. Let me change my internet theme real quick. This may cause me to lag for a sec, but one sec. Okay, I changed my internet to wired. Can you still hear me? Let me know in the chat before I go any further. I should be... Let me refresh this real quick. Can y'all still hear me after I change my internet theme? I should be fine, but someone let me know. Okay, cool. Thank you, Muay Thai Mark. Okay. They pushed malicious updates to widely used packages. And there was a phishing domain. The malware is a crypto clipper built to steal funds. It passively swaps your address. And the community caught it fast, and that's why we saw all those tweets about it in the past few days. But the fact that 2 billion weekly downloads were compromised shows how fragile our systems are. Check this out. This is a more technical breakdown by Blockade. All these NPM packages, these are like developer packages. Even with this malware, an attacker still needs the victim to sign end transaction. That's why simulation and validation are critical. to any crypto project beyond confirming that you're not using one of the affected packages. Make sure every transaction you interact with does not come from a compromised website. And that's why you might have noticed a lot of projects were posting in the past few days that they were not affected and that they are safe from this. And check out how many downloads per week these packages have. Like millions upon millions. Actually billions if you add it all up. That's why there's like a really widespread attack. Supply chain attack. And here's an update. The attack fortunately failed with almost no victims. It began with a phishing email from a fake NPM support domain that stole credentials and gave attackers access to publish malicious package updates. So, I mean, he's obviously biased because he's a CTO at Ledger, but he's saying hardware wallets are built to withstand these threats. And check this out. It really failed. The attacker got like only a few $100s. And this may be old, but they didn't get more than like $1,000 even after such a widespread attack. So they got owned. And even Trezor says Trezor hardware and firmware were not affected by this supply chain attack. And this guy shows this is the phishing email that's caused the largest NPM attack, impacting packages with more than 2 billion. This developer, even this pro developer, got phished. You see, that's why y'all got to be careful, folks. Don't click on links. Double check everything. And when in doubt, just don't click it. Right? Like, if you got this email, chat, would you click it? Would you update your 2FA? Better just go to the actual site yourself and check, or look on experts, or just be slow to do it. You know, this is safety here. Don't get phished. This is like a very common way how people get hacked these days. But anyhow, folks, the goal is 100 likes on the stream. If you don't mind, if you like this stream, if you don't mind helping me out, please smash that like button, whether you're watching live or after the fact. Now, let's go to the main segment of the day, which a lot of y'all have already jumped the gun and started discussing, are we in a recession already? Well, let me pull up some stuff to spur the discussion, some data points, some analysis, some contrarian views. I have like 20 things to open, so give me a sec. Okay. This all happened because check this out, the largest jobs revision in history was minus 824,000 in 2009 during the global financial crisis until today. Massive downwards jobs revision, which shows the job market is weak as hell in the US. And that is giving the question as, are we already in a recession? Is the Fed late to cut rates? Like President Trump and Secretary Bessent and a lot of other people have been saying, right? Check this. This is insane. The largest jobs revision negative since the global financial crisis, even more than that. I mean, heck, I feel like the markets are great, right? But as people always say, folks, the stock market is not the economy. The stock market, say that with me, folks. The stock market is not the economy, right? Keep that in mind. There it is. The U.S. Labor Department just revised 911,000 jobs out of 12 months of already reported data, the largest revision in history. What's next? Let's explain. So, where are these job revisions coming from? Leisure, hospitality, trade, transportation, utilities. Total private hiring was overstated by a massive 880,000 jobs. And even things like professional business services, information, financial activities, there are cuts, revisions along the board. That is insane. We're seeing revisions larger than the largest financial crisis outside the US Great Depression. Is the economy already in a recession, folks? That's what we're asking. That's what we're exploring today. Have we been in a recession since the Biden era, right? Have we? Largest negative 2 month net revision in US history outside of 2020, which was the pandemic, a generational event. Take a look at the data if you exclude healthcare. Excluding healthcare, the US economy has lost 142,000 jobs over the last 4 months. That's insane. The US labor market is entirely dependent on healthcare job gains. Look how many industries have lost jobs in the past 3 months. Like, almost all of them. It's insane. Gold, up more than 40%. Gold is absolutely rocketing. Gold knows that the Fed will be forced to cut rates. The Fed has a dual mandate, remember, unemployment and inflation. So they've been laser focused on the inflation side, but the job market is worse. Now, the question is, are we going to cut just 25 basis points or even more potentially? Because of inflation, the dove will take a dovish but cautious, blah, blah, blah. Check this out. Gold spot price. Gold spot price. 3 days? No, let's give it. Check this out, folks. Absolute rocket ship for gold. This is gold we're talking about. This is not Nvidia. This is not a shit coin. This is not a high-flying tech company. This is gold. And it is absolutely rocketing lately. That gold knows that the economy and the markets are unhealthy. What does gold know, guys? That's what we're asking today. Now check this out. Has the US already been in a recession? The Biden admin fueled job growth with $2 trillion deficit. Otherwise, private sector jobs negative. See, the government and health services, but other stuff negative, folks. And was this all a mirage? Has it been a Biden recession so far? Check this out. Food for thought. How does the BLS, it's the agency for the labor statistics and things like that. They're saying with rigged numbers like that, I can't help but to think we've already seen a recession that was covered up under Biden. How many indicators went off warning of recession that were dismissed? It may have been all of them. Chat, let me know. Do you think we've already been in a recession since like 2021 or at the very least like 2023 or so, you know? And remember when we had 2 consecutive quarters of negative GDP, so Biden conveniently changed the definition of a recession? Guess what? We never came out of that recession. This was 2022, so White House recession rebrand. Remember this? Remember this in 2022? I remember this. Who else remembers this? Dang, this is a big call. Recession since 2008. Maybe if you adjust for the money printing, like the S&P is like flat. I was seeing that. S&P adjusted for USD weakness is flat on the year, which is crazy. Food for thought. Food for thought, guys. Food for thought. You can't always trust the default metrics and default analysis. You got to be contrarian sometimes. It's not always right. Contrarian isn't always right, but sometimes it is. And it's important to consider the other opinions. This is another BLS scandal. So Trump was absolutely right to fire the BLS commissioner. There was virtually no job creation in the last year of the Biden admin. The Fed should have started cutting in February. Say it louder for those in the back. Who thinks the Fed should have cut way earlier because of this falsified or incorrect jobs data, right? Check this out. This makes things much more clear. We've entered a recession at the end of 2021. Up until that time, a recession was a result of 2 consecutive quarters of negative growth. Blah, blah, blah. They changed the definition. The recession was simply covered up by new jobs numbers. If you remove the inflated numbers, that graph above shows the bottom falling out. Wow, 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 wow. Unemployment numbers are a lie. Also, GDP. We've been in a recession since 2021. Chat, I'm really curious to hear what y'all think. Do y'all think we've been in a recession already for the past 2 years? Even 4 years? Even how much? Since 2008? Like someone in chat says? It's not only contrarians, even Bloomberg's chief economist's stunning admission. Jobs revisions confirm recession started in April 2024. So maybe Wall Street is not willing to go as far back as we are, but April 2024, honestly, that feels true, right? It really does feel like we've been in a recession. I don't know about y'all, maybe not the same for other countries, but in the US, it definitely feels like job market, just like the prices and affordability, everything, right? What do y'all think? Are we tripping? Is everything fine? This matters though, folks. Folks, this matters because I made a whole video arguing that the effect of rate cuts on Bitcoin depends a lot on one thing: the state of the underlying economy and also expectations and things like that. But we got to get this right. Like, is our economy super weak right now or no? Because the cuts play into that broader picture. Then what is? Things like the labor markets and affordability and things like that. What do you think is going to come in the next 12 months? A huge crash, maybe? Let's see. I have more to show you. I have more things to show you, folks. Stick around. I have another like 10 points of views to pull up. Give me a sec, pulling all of them up. Okay, so some people arguing that inflation is sticky and accelerating. And Grok says that many metrics show inflation accelerating since spring, but August figures release soon. This matters because if inflation is high or sticky, then the Fed may be in a hard spot. They may not be able to cut as much as the job market would like them to, you know? That this all plays together. This all ties together, folks. This all ties together. This all is our pieces of a big puzzle. Check this out. There's a lot of inflation data coming this week. We already got this today, this morning, PPI inflation. But then we got CPI tomorrow, a huge data point right here tomorrow that we all got to keep an eye on. The market may be very volatile until then. So be careful, folks. Because check this out. This was this morning. PPI inflation falls to 2.6%, below expectations. Month over month are negative. Rate cuts are on their way. But if you dig into it, point is, long story short, you can do your own digging into this. But point is, this may not be as bullish as it seems. We also need to take into account CPI tomorrow. If CPI is sticky, then this PPI thing may not be as bullish as everyone is saying on crypto Twitter or on Twitter in general. Okay, so if CPI isn't also very like decelerating or falling, then we may get a whipsaw. We may see a lot of volatility in the market. So be careful. But here's the thing. Can we even trust this data? As a reminder, PPI and CPI are also under the BLS umbrella. And this is the agency that gives the labor revision data. So can we even trust those? Some people are saying 50 basis point rate cuts is locked in. Because remember, right now on Poly Market, things are actually we'll look at that in a sec, okay? But first this. If the Fed knew how bad the labor market truly was, it would have cut 25 basis point in March and another one in June, July. There's every case to be made for a 50 basis point cut in September. And some Poly Market whales have been betting that the Fed will cut 50 basis points instead of the current 25. Let's take a look at that actually. Poly Market. Ooh, 50. Okay, let's take a look at the past. So 50 basis point has been climbing to 15%. It's almost 100%. It's like 97% chance that we get a cut. But the question is, how big of a cut? The percentage chance of 50 basis points is rising. Could we get a surprise and get a 50 basis point cut? Especially if CPI comes in like decent, like better than expected, then we may very well get a 50 basis point decrease, which would potentially be give a pump for risk assets. Yeah, if we can't trust the data, we're shooting in the dark. Yeah, that would absolutely suck if we can't trust the data. It will only be 25 basis points. Honestly, Cryptic Joker, I think I agree with you because I don't think the CPI will be that amazing, is my point. So I think I agree with you. Also, it's not only September, it's also the number of rate cuts for the remainder of 2025. The odds of 3 rate cuts surged to 39% per Kalshi. So that's something to keep in mind. Even if it's only 25 basis point, like Cryptic Joker says, then we could still get more in terms of quantity for the rest of the year. Yeah, Cryptic Joker knows what he's talking about. US 10-year bond market dictates. Yeah, exactly. He knows what he's talking about. And then check this out. What does this data indicate for the price of Bitcoin long term? Global rate cuts increase liquidity, often boosting risk assets like Bitcoin. Historically, this has correlated with Bitcoin rallies, but analysis shows no consistent direct impact. Prices can drop amid recessions or volatility. So just because we're getting cuts does not automatically mean that Bitcoin and crypto is going to rocket. There's other factors we got to keep in mind and consider. Bro, Maverick, you gotta read Scott Bessent's uh, article. He explains exactly what you're asking. Ooh. Right here. The Federal Reserve is among the foremost drivers of inequality in America. By failing to deliver on its inflation mandate, the Fed allowed class and generational disparities to grow worse, expanding the divide between asset owners and lower income Americans. My summary, the crux of his argument is the Fed is driving up asset prices for investors, not consumption and true growth for everyone, by maintaining huge balance sheets and QE. He also singles out housing as a big area the Fed has intervened. They loaded up on $2 trillion in mortgage-backed securities post-global financial crisis. Now we have a generational divide of home ownership between the ZIRPs, the zero income rate policy, and the ZIRP knots. See, socialism for investors, capitalism for everyone else. Secretary Bessent answers your question to the T, Maverick. Yes, a recession with stocks at all-time high. Absolutely, guys. Absolutely, that could happen. And if you want to read why, read Secretary Bessent's article. Remember, I forgot what stat it was. It was like most of the stock market is owned by like the top 10% or something like that. The point is, just because the stock market is doing well doesn't mean that most Americans or most people around the world, in other countries even, are benefiting from that or are feeling that benefit, you know? There's a first time for everything, Cryptic Joker. First time for everything. Okay, folks, I want to move on to a really fun segment, KOL Call Tracking, because there are some. Check this out. There are some interesting ones. First of all, Crypto Michael calls for Uptember, so we shall see. September 10th. Let us add this to the tracker. Crypto Michael 9/10/2025 Uptember. Okay. Added this. Okay, what else? Right here, Bob Lucas's alt season. Let us see. Bold call. Bob Lucas. When was this, by the way? This was September 10th also. Alt season soon. Bold call. Bold calls, everybody. Bold calls. Alt season. Really now. Really. And this was September 10th. Okay. Okay, what else did I get? What else? By the way, guys, I want you to watch this with me real quick, just in case you haven't yet. Have you ever wished that you could hold influencers and KOLs accountable for their bad calls or shady tactics? I mean, every cycle, it's the same story. Influencers make wild predictions, and when they get it wrong, they move on like nothing ever happened. No receipts, no accountability, nada. Well, my friend, let me just tell you, that ends now. You see, here at Retail DAO, we built our own KOL call tracker where every call gets logged, tracked, and scored. No cherry picking, and definitely no hiding. Just transparent results for the world to see. And the best part is, you can add to it. All you gotta do is tag @RetailDAO under any KOL's post and we'll put it in the tracker. Just be sure to follow us on X to see the results of our tracked calls over time. So yeah, folks, you should be doing that if you haven't already. Okay, now let's see. I think some people tagged us. Let me check it out. Right here. He is calling for Bitcoin to dump heavy, chop in September, and dump in October. Okay. Okay, gonna get this one. Crow, the Crow. This is September 9th. Crow. Chop in October, dump in, or no, chop in September, sorry. Dump in October. Okay, what else? I think other people tagged us. Adding to the KOL call tracker. Let me just go to this thing real quick and then I'll find. Okay. Here's one. Thank you, Joe Schmo, for tagging us. Immortal, September 6th, is calling for 90K BTC. Immortal 9625 90K BTC. Okay. Let's see what else. Yeah, I don't follow Anthony for anything, to be honest. It's all just noise, in my opinion. KOL call tracking. Okay, what else though? What else? Let's see. I know I liked some stuff. Okay, let's see. What else? Ah, right here is one. Send Timber. Bitcoin Munger, September 7th. Bitcoin Munger, Send Timber. When was this? September 7th, 9/7/25. See, a lot of people disagreeing. This is going to be really juicy for us. This is going to be great. We're going to get a lot of people either right or wrong, and soon. Let's see. What else? What else? What else? Oh, here's one. Cav is calling bearish for BTC. Cav. Okay. when was this? This was September 6th. 625. Bearish. Big drop incoming for BTC. I mean, if September ends up either up or down or even chop, a lot of these people are going to be wrong. Okay, but I want to go to a change my mind segment. Have an interesting one for y'all. And this is related to what we talked about earlier. Whoops, wait, let me add it here. Okay. Change my mind, chat. I think that the upcoming rate cuts will surprise everyone. A lot of people in the crypto space, even here in chat, are thinking that it's either going to be very bullish for crypto, just send everything like alt season, risk assets rocketing, or people are bearish. But there's a lot of things at play, like I was saying earlier. It's how the underlying economy is. It's how the inflation numbers come in. Not only PPI, but CPI as well. And what the Fed, what Jerome Powell says, and not only like if they cut in September, but the amount, 25 or 50. Not only that, but what their forecast and tone is for the rest of the year. Are they going to do more than 2 cuts in the rest of 2025? Are they going to do 3, maybe even 4? And like markets are forward looking, right? So we need to take into account everything, and it's not just as simple as like cuts are good or cuts are bad, you know? I think it's going to surprise everyone. I think there's going to be a ton of volatility that's going to shake out both longs and shorts surrounding these cuts. So that's why I feel like if you want a full port long or full port short, then go right ahead. But I would be very careful because, yeah, I think it's going to surprise people is the point. I think we for sure will get the cuts, yeah. But the question is how much and like how many, and also what the broader like economic view is at that time. So that's my change my mind. And rate cuts are always bearish after. Today gonna end up red? Really? You sure? Let's take a look. Dang, that'd be a bold call. That would be a bold call, Esley. If today ends up red, that would be a bold call. Rate cuts always bearish after a long pause. Do you have data that shows that? I mean, I believe you if you've actually checked it out. Folks, anyhow, we are constantly debating this in Retail DAO like almost every single day. So you definitely should check us out with my link below, retaildao.xyz, to find out more. But also be sure to follow us on X because be sure to follow us because I'm posting stuff like the one I showed you, but then I also made other cool stuff like beginner mistakes and also this interesting one. Let me just show you the very first preview and then you can follow us to watch more. What if in the future AI takes all our jobs and everyone just becomes full-time investors instead? Sounds crazy, right? Well, that's exactly what Vlad Tenev, the That's what Vlad Tenev, the CEO of Robinhood, predicted. So I was kind of playing out in that world how people, instead of going to the office, they would join investors groups like Retail DAO. So you guys should definitely get ahead of the curve and join Retail DAO. It's still affordable. And if you don't like what you see, if you don't like us for whatever reason, you could always sell your tokens afterwards. There's a token gated Discord. Learn more by checking us out in retaildao.xyz. Would definitely really love for all of y'all to join. All right, folks. I will see you all on Friday. Had a great discussion with you on whether or not the recession is has been already here today. But I have some other stuff to catch up on. See y'all around in the Discord and Retail DAO on X. See you everywhere, and definitely see you on the following